What is up, YouTube? This is the Working Investor. In this video, we are going to compare and contrast the two covered call ETF funds from RegShares. We're going to specifically be comparing FEPI, which is the RexFang Innovation Equity Premium Income ETF, and we're going to compare that to AIPI, and we're going to compare that to the NASDAQ. And I'm going to show you why I'm going to completely sell out of one fund and I'm going to purchase a different fund, and I'm going to do it strategically with an arbitrage. And like I said, the one we're comparing it to is AIPI, which is now here's the thing, it's called quote unquote AI Equity Premium ETF. Now we're going to focus on, I was thinking to myself, this is a subsector of AI, has, more risk, but after pulling down the curtains, nothing could be further from the truth. So why am I reevaluating my position? Because currently I have 50-50. I have $5,000 in FEPI, about 100 grand in FEPI, and 100 shares, 100 shares in FEPI and 102 shares in AIPI, roughly 5,000 a piece. I made a video the other day where I compared income ETFs that pretty much compare it to the benchmark of the NASDAQ of the tech sector. And I want to see which ones have exceeded in total returns the NASDAQ. And if you recall from the video, I'll just recap over here. The timeline was June 4th, 2024 to 11/23/2024. The reason why I chose this specific timeline is because when I keep saying, when you want to have an apples to apples comparison, you want to compare total returns to total returns, because it's not fair when it comes to income funds if you do not include total return, because you have to factor in the dividends into the equation. Another thing you always have to factor into the equation is to compare like with like, especially when it comes to timeline. It's not fair to compare something that's been around for a year and use a 12-month timeline horizon to something that's been around for a few months with the shorter horizons. So because AIPI was the most contemporary fund, I went ahead and matched all the funds from that timeline to the most data that we have. So it's approximately 5 months worth of data. And my source is Seeking Alpha, and here we go. So the benchmark was the NASDAQ 100, and it returned 11.65, I should say, percent in total return. There is a small little dividend that the Qs have, but 11.65% was the total return. So if you recall, there was FEPI, which was the bottom of the pack. That's one of the reasons why I was a little bit disturbed with FEPI. But I also, before I moved, and then AIPI was the top of the pack from what I compared it to. And I compared it to YMAX, a Yield Max ETF, and that had 12.45%. That also beat the benchmark of the NASDAQ. YMAG had a 13.89% total return, which did better than YMAX in that time period. And then QDTE, which is a Roundhill product on the NASDAQ 100 by Roundhill, with overnight exposure, 0 day to expiration, cover call options close to the money. And they actually, they outperformed the benchmark of the NASDAQ. So the number one winner that I saw here was AIPI in total returns. Even though AIPI has about 34 and a decimal percent dividend distribution, and they're pretty consistent, and their NAV has demonstrated to be so far relatively stable. Again, past performance is not indicative of future gains. Everything I say in this video is not financial advice. This is my personal journey, my own opinion. Speak to a financial advisor, tax accountant, lawyer, whoever you have to speak to. So that's why for me, I was like a no-brainer. I'm going to go from FEPI to AIPI, but then, of course, you have to think about risk-adjusted return, right? Because FEPI has a 25.2% distribution rate and AIPI has a 34.8%, but in total returns, AIPI does even better. So let's look behind the curtain. So I went ahead and pulled up the holdings of FEPI and AIPI. So anytime you look at a fund, in my opinion, a fund is only as good as several factors. An ETF is a basket of funds. So if you look at the basket of funds, you get to see exactly what comprises the ETF. And of course, there is also sizing, position sizing, like allocations. And another thing is, of course, how the managers especially actively manage funds, like, income-based ETFs that are cover call strategy. They use cover calls or any type of option strategy. How are they managing the fund? So those are some parameters that I look into. Now, what you see here, to make everything really simple, I color coded everything. So this is in FEPI as of November 21st when I pulled up the thing. The green is what FEPI is what overlaps, what AIPI also holds in its basket of funds. And I'm going to show you the AIPI holdings. The yellow is exclusive to FEPI and it's not found in AIPI. And that's so the only thing that that AIPI does not have that FEPI has is Tesla and Netflix. And another thing you need to consider, this line right here where it says weighting, because that tells you the how much percent they put for every fund. And these are the actual stocks that they own. And then here they have all the cover call, strategies. So that's one of the good things with rec shares or unique things compared to other funds that I have is that they actually own the underlying. There are a lot of funds that do own the underlying itself. So you could see the weight that they have. And you see they're mostly balanced. They're all around the 6% range. And then a couple, maybe Tesla is Netflix is a little bit higher, weighting 7.27%. And of course, the fund, they mentioned in their prospectus and on their website that they rebalance monthly. So I guess if something is out of their allocation, they rebalance and they reconstitute quarterly. So now if you look at FEPI, you'll see they have pretty much the Magnificent Seven, and plus a little, plus other stuff. And when it comes to AIPI, let's see if I can find this. When it comes to AIPI, you'll see that they have, like I said, the green is what is all the stuff that FEPI has, all the good stuff. And the yellow is stuff that's unique, companies that are unique for AIPI. And of course, you want to look at percent holding, you see that some of them are in the 2% range and, 2-ish percent range. And then a couple are like really heavily weighted like Palantir and CrowdStrike. Obviously Palantir had a big run up. Again, they rebalance monthly and reconstitute quarterly. So if they see something they want to kick out or replace, they'll think about it every quarter, what they want to get rid of. I'm not sure what their target allocation is because some of these funds you see a massive discrepancy, like 6%, 9%, 12% versus, sub 3%. So I'll have to figure out what their, what their thing is. But another thing I was thinking about is that just because it's AIPI themed, they mentioned in their prospectus, and I took a copy of it, is that right here, that they use the Beta AI, I had to look this up, the Beta AI Leaders, it's, index. That's a rule-based composite index that tracks market performance of companies listed and recognized in exchanges based on the US that are at the forefront of AI technology. So looking at it for companies that are at the forefront of AI technology. So most of the Magnificent Seven are at the forefront of AI technology. So, so basically they have a whole rule system how they use it. It's like a theme-based fund, but overall, in my, I don't think it's massively more risky. This is my opinion, to have AIPI versus FEPI, because FEPI has a total of 50, I counted, and they say in their perspective they have 15 stocks. AIPI has 25 stocks. If anything, AIPI has more, it's more spread out. But though the weighting of the stocks could be a little different, as you saw, sub 3%, 6%, 9%, 12%. I have to see what their target goal of each percent is. So that also makes a difference. It's not just, diversification of how many companies, but how much weight are you giving to which companies. If you put too much weight in very few companies, then it would have mostly the risk of those very few companies. But I don't think, in my mind, I don't think the AIPI is such a risky, niche, move compared to FEPI. Again, it has more stocks, more spread out in a way. So that's why I'm going to go from FEPI to AIPI. Now, I'm going to do this thing called the X-date arbitrage. So over the past, if you go on their website, and I'm sure you've seen it, AIPI pays about $1. They're very consistent, FEPI and AIPI. If so AIPI pays about $1.46, $1.40 something, close to, or sometimes closer to $1.50. And FEPI pays about $1.09 or something like that. So you can see over here if you scroll down. So my plan is that tomorrow, today actually is declaration day. They still have not declared a dividend. I think I just got the email. They always give the email around 6 p.m. Eastern time. The X date is tomorrow. So both FEPI and API will drop by the amount that they give the dividend. So obviously AIPI has consistently given $1.48, $1.46, $1.48, $1.47. So I would imagine somewhere in that range of close to $1.40, $1.50 range. And FEPI has been given like $1.09, $1.10. Somewhere a little over $1, like between $1 to $1.10, somewhere in that range. So FEPI will drop more than AIPI. AIPI will drop more than FEPI. So the idea is to sell all of my FEPI on the, I see $1.09, $1.08. So the idea is, they just came out with it. Look at this, $1.09. So maybe I just have to refresh it. So $1.09 is going to be the payment. Let's see if this is literally just happening right now as we speak. Let's go to cover call. So we tell $1.09, maybe because I just refreshed my screen. And let's see, voila, $1.51. Wonderful. So I have real numbers now. So FEPI is going to drop by $1.09 tomorrow, and AIPI will drop by $1.51. So basically, I'm going to sell all of my FEPI and buy AIPI, and I'll have more money I'll be able to buy more shares of AIPI with the same amount of funds. Sorry about the going around the circle over here, just all these updates coming up. Anyways, that's my goal. These are my reasons. This is my personal journey. Do your own research, make your own decisions, have fun, have a wonderful trading week. This is The Working Investor over and out. Have a wonderful day.